Welcome back to Morning Movers. I'm Diane King Hall, coming to you live from the floor of the New York Stock Exchange. We begin today watching markets pull back a bit. For more insight on today's market action, we want to welcome in our next guest. That's Dale Smothers. He's the president and CEO of RDS Wealth Management, joining us here at the big board. All right, so we're looking at a market that is softer the past couple days, or couple trading session. We're pulling back a little bit today, Dale. Now, last week, the market shrugged off hot inflation data. How do you look at the mindset of the market right now?
Sure, it's all AI. The hype, the optimism of what AI could do is certainly what's pulled us out of this dip due to oil. I think if oil continues to stay at over $100 a barrel, you are going to see this hype perhaps dial back just a tad, especially as you see inflation become more and more sticky. Kevin Warsh, now the new administration of the Fed, is taking the command, but their hands are tied. And these cuts that we were optimistic about maybe going into the beginning of the year, it could very easily even look more like a rate hike, which is not good for anything in the market. With that being said, artificial intelligence still, I think, has a high demand, and there's a ton of demand that is flowing into profitability, and there's opportunities in names, especially on this pullback.
So from strategist to strategist, or portfolio managers, CIOs, et cetera, the theme I'm hearing, including from yourself, is that the AI story is still intact, and that you could still continue to see momentum because of that, and the earnings picture is strong there. Is that an accurate take from your point of view?
Certainly. Earnings are strong, margins expand, demand remains high. I think we might be in the early innings of what we could see as profitability from artificial intelligence, which ultimately is the name of the game. You've got companies that are trading at several years ahead of what needs to be earned, and you've got some companies that are probably overstretched in their valuation for sure. But then you've got some companies like Micron, for instance, that is trading at 8 times next year's earnings, and 8 times earnings is good for any company, much less a chip company. So there are some names that are still on sale, and there are opportunities there, especially, again, in these pullbacks.
We just heard from Kevin Mon. He shared a similar perspective on Micron, even with the parabolic move that we've seen in the memory space. So let's talk about your view for the S&P 500. You're expecting 8,000 by the end of this year. What's the path to getting there?
Yeah, it's funny enough, November, December, I was calling for 7,200, 7,300, and you know, nothing looked nice going into March. But then all of a sudden, artificial intelligence brought us higher. I think that demand for artificial intelligence continues to drive us towards 8,000, but it is not going to happen in a straight line. And this is the thing that a lot of investors need to be aware of, Diane, is that there will be headwinds, and a lot of those headwinds right now are oil. We're going to see a little bit of cooling off here. There could be tensions in the Far East as well, with China and Taiwan and Cuba. That's a huge variable here. I was actually speaking to an analyst here on the floor that's a specialist in Latin America, and that was something we started talking about. Is Cuba going to affect the domestic markets here? Not to mention the fact that we've got domestic politics in midterms, inflation, the whole 9 yards. A lot of reasons per se to say be negative, but I think 8,000 happens specifically on demand from AI, the hype from AI, and continued earnings growth.
And let's talk about one of the potential speed bumps. Oil is pulling back a bit today, but we remain elevated. We're still in triple-digit territory, whether we're talking about WTI or Brent crude right now. What's the duration where you start to get worried, right? Yes, we're in this ceasefire, but the conflict with Iran has lasted longer than many expected, than what was indicated. Is it that it needs to be resolved by June, by sometime this summer, for the fragility that's in the market to kind of take a back seat?
Sure. I think if we don't see something by June, you are going to have an opportunity here to buy some names at a dip, because that dip will come from a lack of sentiment, the decreasing sentiment. When we see another PPI, CPI that prints higher, it's going to pull sentiment. It's going to pull investors' confidence down. And with that, you're going to see a little bit of a sell-off. Again, 8,000 is not going to happen in a straight line. If we don't have this resolved by the end of summer, now you're talking about fundamental breakdowns. You're starting to hear this in management calls whenever we're opening up an earnings call and listening. You're going to start to see forward guidance be suspended. And that's not going to help anyone's portfolio. And it could very easily also derail this 8,000 thesis that we have if sentiment falls too sharply.
You talked about Micron, and that's a name that I'm not surprised to hear you mention. It does, again, echo with others. Oracle, though, you say it's an underappreciated name in AI. Some may see this as a controversial name, but why do you like it from here?
Yeah, we can't forget that this is one of the hyperscalers. I mean, it seems to have been set on the back seat and forgotten about. In our book, anything under 200 is a buy here for a long-term play. Memory, they're making major headways in memory. Of course, chip making in general. I like Oracle. I like that name, and with a steep pullback that it's seen over the last 3 to 6 months, it's almost a no-brainer for us to be taking part in this dip and buying this dip. And one of the unique things is it bounced off of its 200-week moving average just a few weeks ago. And that presents an opportunity for us to buy a good name, a strong company at a really good price. Again, long-term buy and hold. Be ready for choppiness here. Know what you own and hold it.
Okay, and one more quick thought from you on Rocket Lab. You like this one. This is about the space race. Tell me a little bit more about your views on this.
Yeah, I think Rocket Lab could be a moonshot, pun intended. The idea that space is going to come into the news cycle with the IPO of SpaceX, it's going to bring a lot of attention to this sector. We have farmers from Kentucky, Tennessee calling us wanting to get involved in SpaceX. You know, and we are telling investors right now, be weary of SpaceX because it's likely that name is going to be bid higher for retailers off the back of the IPO. And I think that looking at companies like Rocket Lab, for instance, as a good opportunity to still get involved in the space exploration, putting artificial intelligence data centers into space, that's a really strong company. It's got a lot of strong earnings. The margins continue to grow. It's a little speculative, but with space being the new hot thing, that's a good place to put some money.
It is certainly the new hot thing. Thank you, Dale.
Yes, always a pleasure, Diane. Appreciate talking to you.
Thank you so much. That's Dale Smothers. He's the president and CEO of RDS Wealth Management. Coming up, time for